What's up, everybody? It's the Digital World Podcast. We're going to continue the conversation here on yields because I think it's important to keep track on it, right? And I'm going to keep harping on it because really, in reality, we don't know where it's going to go, right? And right now, and I think this is what I'm trying to build my case on, is that we're in a bond market bear trend, then this is going to be a multi-decade trend. Okay, so that's kind of what this whole premise and what I'm going to just continue to talk about, right? And I want you to see here, okay, these are the last 10 years, the 30-year treasury yield. And what you can see is, actually, let me give you the max. Okay, let me take it back to the 1980s, right? This is the peak of the 30-year treasury yield, which was at 15.19%. And this was in September of 1981. Okay, so ever since then, we've just seen a downtrend in 30-year treasury yields, right? And typically, for those of you who may, be hearing this or learning this the first time, is that in these, usually the way bonds work, right? As the yield comes down, right? In this case, it's coming down from 15% to, whatever it is today, approximately 5.05. The face value of the bond increases, right? So if you paid, let's say, $1,000 in 1981, right? If you were to, if it were to mature over time, it would then you would get like $50. So you'd sell the face value of the bond for $1,050. So you made a profit off of it, and at that time you're accumulating the yield at which you had purchased the bond at, right? And so now, if indeed we are going into bond market bear trend, what that means is we're going to have the yields increasing, but technically the face value of the bond would be decreasing. So you can lose money on the value of that bond, right? And so if indeed we bottomed in what was right here about July of 2020, it begs the question, right? Because you can see here, right? Like you have these uptrends, right? August 1986. By 1987, we had like peaked there, and then it continued the downtrend, right? So 5 years is a pretty good, substantial amount of time to see where this trend is going, right? And so far, it hasn't given any indication that it's going to continue its way down. And so you even see here, right? 83 to 84. It was about a year. And then it kept going down. So 5 years seems to be a good indicator of where we may be potentially going, right? Like I said, anything can happen. But by the time people realize that there's been a turn in the bond market, it's already been several years, maybe even a decade, right? Because at this point in 1981, you're like, oh, okay, we peaked, we came down in about a year, and then we had an uptrend again, and that peaked in a year. So you had a 3-year period, but we could not make new highs on the yield. And so what I'm saying and what I'm monitoring is the housing market. Because if we keep going up, right, this tends to have a correlation, about a 0.8 correlation, positive correlation with mortgage rates. Now, for those of you who may not understand what 0.8 means, is if you were to put a graph side by side of the 30-year treasury yield with the mortgage rates, what you would see is that they're very closely correlated. Now, one is an indication that they're exactly correlated. 0.8 is a strong positive correlation, so that means they're basically going hand in hand, right? It's technically not saying 80%, but it's for to break it down in easy terms. I guess you can put kind of say that it is, right? So I hope I didn't make that more complicated than it needed to be. But essentially, this 30-year treasury yield helps us give a look at what borrowing costs would be for a home. Let's look at 30-year mortgage rates. What are 30-year mortgage rates in the last 90 days? So, per Investopedia, the article 30-year mortgage rates hit their highest level in over a year. We see, beginning at, March 3rd. Seems to be our bottom right there at 6.5. We are now sitting at around 7.15%, right? So, and it kind of goes in line with our 30-year treasury yield going up. And so what this does is it makes borrowing costs, right, for a mortgage that much more expensive. And here's the breakdown, right? National averages of lenders' best mortgage rates. So 30-year fixed, 7.15, the FHA, and so forth and so on. Now, I bring this up because I think there's very cause for or warning signals, right? And I want to share this quote here. Okay, this is Darth Powell on X, and this is, keep in mind, this is April 2nd, 2008. Currently, April 2nd, 2008, the chief economist was interviewed, and it was the chief economist of the National Association of Realtors. And Lawrence said, currently home sales are at 10-year lows, back to 1998 levels. I expect a strong recovery in the second half of the year. There's a buyer confidence issue. Home buyers are currently holding back. Some of that is due to false information that they believe markets will decline. By 2009, things will be much healthier. Does that sound similar at all as to the situation we're encountering today? And then to add to that, he said home prices fell an additional 22% after this interview, not recovering for 8 years. And so my point of the matter is, if we're in a time where we're seeing home sales go back to kind of those 2008 levels, right? Because I've shown you the charts where we're seeing home sales have now increased a lot. Could it be that by the second half of this year, we see, every time is different, but it's the same at the same time, right? Cycles repeat. But I would not be surprised if at the later half of this year, right, we see things getting even worse. Because the summertime is usually the seasonal time for builders to be upstarting projects, doing more builds. But if the buyer confidence isn't there and they're sidelined, who's buying the homes, right? You have all these people putting their homes up for sale. So my question to you is, where are we headed, right? I'm just here to look at the trends. What are the trends telling me today? And what are the trends historically? And when I look at this chart, historically, we've had 40 years of a downtrend in treasury yields, right? And we have indication, right? You can any way you slice it, 5 years is a good amount of time to see if there's been a change in trend, right? At least when I look at it in this chart for the last 45 to 50 years. And so if we have turned the corner and are starting a new trend, what does that tell us, right? So I'll leave you with that thought. Like, comment, let me hear your thoughts. What are you guys seeing in your area? Are there any price cuts that you're noticing? Are there a lot of homes going up for sale? Let me know in the comment section. Thank you for watching. This is the Digital World Podcast, and I'll see you in the next episode.